Welcome into the Friday, December 22, 2023 installment of Market Plus. Joining us now is Jeff French. Again, I'm going to say we should probably start recording the conversations between. I do need to tidy up something. I'm sorry, you have something on your face. The beard is, you going to keep that? Do we want the people at home to vote?
No, I mean, it's just...
Family voted already.
Yeah,
right? Okay.
It was 3-1 to keep it for today's taping.
Okay.
It's deer season. It's just, get tired of shaving.
Yeah, I get it. I get it. I do want to talk about something also obscure, and that's orange juice. Mm-hmm. What's significant going on there?
Well, about a month ago, I mean, orange juice had been rallying here for a while. A couple things. Hurricane Ian wiped out a ton of orange groves, obviously, last year in Florida. And then they've had some diseases. I mean, it's a 100-year low supply. So it went up to, I think it got it to $440 per hundredweight. But here in the last 3 weeks, it's just come down, and now it's $100 off of the contract high. So big run up, big sell off, classic commodity market. Again, though, a very thin traded commodity. I was trading it, and you would see maybe 1,200 contracts traded a day. That compares to corn. Usually, typically, you have about 150,000 corn contracts traded a day. Not during this time of year, but during physical. So very thin market. Be careful. You can get in, but sometimes you can't get out.
Which is a theme we kind of talked about in the main program. Is it's just lighter trade, so the easier direction to move is everything lower. But we have some specific questions here that might be a little more forward-looking. Let's start with Trent from Facebook. He wanted to know, once the new soybean crush plants start coming online and get rolling, how soon after will we see the market fully react to show the longer-term demand picture?
That's going to be interesting. I mean, I don't think it's going to be instant. It takes a while for these plants to get up and running. But one thing you have to remember, too, I mean, yeah, you crush all these beans, and we've crushed a lot of beans. I mean, the crush reports have shown, record crush, I think, for about 5 months consecutively. But when you crush beans, you get meal, and then you got to sell the meal. And right now, we're sitting right at meal, $380 a ton. We're down here at 2.5-month lows. If we get below $350 in the meal, that's where you could get much lower prices. So it's a double-sided sword there. It's going to bring more demand for the beans, but you had the byproduct that you got to move as well.
So there's one factor, as we show you the November soybean contract moving at 12.58 on the week. Phil in Ontario has another side of this discussion that is of interest that he asked us on X. We all know the weather narrative about South America going forward affecting our grain prices. What's the latest take on that? Will the USDA have a bullish or bearish surprise come January 9th?
So for the weather market in Brazil right now, I mean, the trade right now, I mean, the top has come off. I mean, the trade right now probably has 155 million metric tons for Brazil alone. But you got to remember, there's other countries that grow soybeans down there. Argentina, I mean, they grew 20 million metric tons. They had an awful drought last year. They've actually had too much rain this year. They're going to double, maybe even bigger than double their bean crop from last year. So in general, we should have a pretty good area. And you got to remember, Brazil planted 110, 112 million acres of beans. So yes, it is dry. They've gotten some relief a little bit in the most important Mato Grosso. But they are forecasted to get 2 to 3 inches here in the next 2 weeks, so we'll see if that falls. Now, for the January 12th final production report, my gut is I think you're going to see a higher corn yield. I mean, not too much, maybe 0.3 or 0.4 higher, and that is simply from just talking to people throughout the country that just had phenomenal corn yields with the little as rain as we had. I mean, 230, 240, 250, 260 was not uncommon. And these are in places that were 9, 10 inches below average rainfall for the year. So I just would say that I wouldn't be surprised if we see a little bit of a higher corn yield number come January 12th.
Well, that has become, I'm not saying ho-hum, but this one could really have some surprises if it does go higher. Is that what? Would that be a surprise?
I think the surprise would if they lowered it, because the USDA has been on this trend for 3 months as ticking up that corn national corn yield. So I think if they would lower it, that would be a big surprise because the market is kind of anticipating. But the fact is, we have a 2.1 or 2.2 billion bushel carryout. That's going to act as a kind of a wet blanket on any type of rallies. And go back 2 weeks ago. Wheat rallies 90, 95 cents. Corn rallies 22. So, you get 20, 30 cent rally in this corn market, you ought to be selling some cash, buying some puts on strength because like we've seen here in the past, the rallies just don't hold, and March closed at 3.5-year lows here today.
Hold on, I have a couple of cash questions in just a minute. I have one more on soybeans that I want to ask, and this one is Bradley in Nebraska, also on X. Are the soybean market spreads telling producers that there are higher prices in the near future?
The spreads are firm. The spreads are strong. But the flat price just doesn't really want to get off the mat here. I mean, beans in the last 30 days are down $1 per bushel. January got up to $13.98 a month ago today, and now we're down here right around $13. So the trend is lower. Psychologically, we've held these big round numbers, $13 a bushel. But if we start closing below that, especially coming in the new year, we could be down another 40, 50 cents pretty easily.
Let's get to a couple of questions about corn, and Paul in Wisconsin has one for you about relation to another market. You kind of mentioned wheat there a moment ago. Why doesn't corn follow crude and the market swings?
Well, crude here the last 2 weeks has been really a transportation rally. The Red Sea between the Middle East and Africa has pretty much been shut down for vessels because of the terrorists lobbing missiles at our ships. So they are going to have to from the Middle East, they're going over the Cape of Africa. It adds 10 days to 2 weeks on transporting. That is why the oil is higher. Right now with interest rates, time is money, and it adds cost to everything. So that's why you're seeing the rally in the crude oil. How that relates to corn, I don't know. I just think, if crude would get over that maybe $85, then you would probably see some more influence on the corn. But I think at these lower levels, it doesn't quite influence quite as much.
Well, then what about in relationship to diesel? I guess that would be a question Matt in Iowa wanted to know on X. Why isn't diesel going down? Same answer?
I think demand has been phenomenal. Look at the weather that we've had. There has been no weather hiccups, especially in the Midwest here. We've had ample times to get fertilizer on, do all the tillage, haul grain. Farmers, they can't sit still, especially when it's 55 degrees out. So they're out there, they're hauling grain to town, they're doing things, they're working. But I think the demand has just been that good.
Do you anticipate then maybe demand could fall off just for those things you're talking about come spring?
We're gonna have to see. I think what happens here with the stock market. This week the stock market traded up to new all-time highs. It certainly wouldn't point that a recession is coming. You just look at it. Go out Christmas shopping in the stores.
You're not alone.
They're absolutely slammed. So we'll just have to see come here in the next first quarter.
All right, I teased a cash question. We'll finish with the cash question. This one is Mike in Iowa via Facebook. Is there a possibility to see $5 cash corn and $13 cash beans in the fall of 24?
Well, depending on your basis, Deese corn 24 right now is, I think, 502 on the board. So certainly we could see $5 cash. That's not far away. There's a long growing season upon us, and you look at the last 3 years, and I'm talking Iowa specifically, but it definitely goes to Nebraska, Missouri, Minnesota. We are dry. Not severely dry, but it's been an awfully dry 3 to 4 years. So yes, we'll get it planted, but what happens after that is going to be the key. So a lot can happen, but no, $13 beans, cash beans, we're $12.50 right now on the board in November. That's not too far away. So yeah, we could absolutely see that.
As long as we maintain it.
Well, you got to take advantage of it.
Yeah, you don't have to stretch your neck as hard either because of volatility. Jeff French, appreciate your time. Thank you so much.
Thank you, Paul.
All right, that'll do it for Market Plus. Next week, we are going to look at the year that was 2023 and how it impacted rural America. We'll also have the commodity market analysis with Christy Van On Cheeseth. Thank you so much for joining us, and and have a great week.